I want to take a few minutes now and talk gold and some of the nuances I think you should understand. I mean, a lot of people obviously are getting very interested in gold. I'm going to bring Rob Levy in there. Why? Because he works at it every day, bordergold.com. Rob, I just said that more people are getting interested, but what I find is noteworthy is that for the record highs, we're not seeing that translate really into the stocks. We're not seeing it translate into headlines. I mean, of course I can find that somewhere, but it's not the talk of the town that say the way Nvidia was, but it's had a spectacularly strong performance. And so let me just start with a couple of things for you is are you finding the interest pick up at Border Gold, at Border Gold? Are we getting more, regular people, in there purchasing gold at this point?
We definitely have seen retail demand come back to this North American market a little bit, Mike. When it was absent, I think in the first half of this year, and we talked about it, is the fact that gold prices kept getting higher and higher, and it was what was fueling that price because North American retail investors seemed to be selling into that market, taking advantage of the higher prices. But definitely, this turn that we've seen in the markets, whether it's the Fed indication that they're going to cut interest rates in September, or that gold has sort of held above 2,400 US the ounce and even made it record highs at 2,500 US the ounce. It definitely has brought back the retail buyer that wasn't present. That sort of supply demand from product coming into the market. First half of the year seemed much more tilted towards people selling. The investor is back at these levels.
Well, and plus, of course, as most of our audience is Canadian, although I want to say big shout out to our Australian audience, our Swedish, we got people in the UK and, of course, in the US. But for a Canadian, they're sitting there and it's offered protection against the Canadian dollar because, it's not buying much anymore.
No. I mean, when you talk gold, 3,400 US dollars the ounce, it definitely hits you and takes a step back. The fact is, yeah, Canadian dollar weakened against the US dollar, so there's one area of strength, but also supported by the fact that bullion prices had a very strong run through the first part of this year. Up double digit in terms of percentage, and you talk about forecasts and it's hard because gold you used to like to buy when it was the Don Cox on page 16 going to page 1. Gold is on a bit of a page 1 in terms of the financial press right now. Everybody's talking about
Mm-hmm.
gold, but
Okay.
even the Wall Street banks 3,000 US the ounce forecast for the end of this year. So it's the little bit of excitement in this market at the moment.
I want to come to something, and I know you've written about it on bordergold.com, but just to make people aware, I mean, there's lots of ways I can purchase physical gold. Obviously, elaborate on a few of them because I've got a question on one.
Yeah, absolutely. A few of the themes or the choices that we see our customers and investors make on a daily basis is, for example, which metal to go into: gold, silver, or you got the platinum group metals,
Mm-hmm.
palladium and platinum. And then you get questions like, do I buy a coin from a sovereign mint, or do I buy something that's still widely recognized and accepted by the market, but doesn't have as much notoriety because it's not coming from a government mint like a bar? And then you get other factors like the size of the investment that you're making. Do you buy something like 100-ounce silver bar all the way down to a single ounce? So there's tons of ways to go with this, but it's questions that investors weigh before they make that purchase.
I mean, I think one of the big issues, I always say is my biggest fear is liquidity problems. Doesn't matter if I'm talking in the bond market. I mean, that's what happened in UK pensions. It's what happened. That's Japan's dealing with this on a regular basis. Federal Reserve stepped in at least 5 times since 2019. It's liquidity. You got to have a buyer on the other side. I would have a tendency, and I'm conservative, if I am buying a precious metal to give myself some sort of financial protection, I would definitely be buying something that is well known, where people aren't doubting the source, whether it's a coin or, as you say, is it a mint stamp, that kind of stuff.
Yeah, absolutely. And I mean, stuff that we sell because we make a two-way market. We're buyers too. So we always tell a customer, we're only going to sell you something that we want to buy back from you on the other
Mm.
side. But to your point there, I mean, that's a very easy example is a customer wants to buy gold in the 1 ounce form and they can buy something like a 1 ounce bar or they can buy a sovereign minted coin. And we always tell them there's a couple ways to look at it. One, the sovereign coin, like the gold maple leaf, is something that's most demanded by our clientele. So when it comes time for them to sell, they want to sell what everybody else is buying. So that's probably the
Yeah.
1 ounce coin. So you pay a little bit more for it. the other thing, and we've seen this through market episodes in the past, is when there's a lot more demand than the market can be supplied with new product, the premiums go up. So, I sort of talk about it as a call option, and potentially sometimes you have a call option that expires worthless. So at the end of the day, you just get your gold price back. When you sell your coin, you get the underlying asset, but you sell a coin into a tight market, and there's the potential for a little premium to go to the upside too. So you pay $20 more for a coin, and there's the opportunity to get that or more back when you sell it.
Something else that just in fielding questions, et cetera, that people aren't as aware of is, yeah, it's expensive now. 3,400 Canadian dollars is, a lot of people don't carry that in their wallet, but they didn't appreciate that you could buy fractions of an
Yeah.
ounce. And so tell me a little bit more about that, because that obviously opens the door for me buying something for my grandchildren, or somebody else saying, I don't have a ton of dough, but I want 10% of what I make. And maybe that's $350 or something, and I get a tenth of an ounce.
Well, it's just the market being better served, and there's more products becoming available. It used to be fractional gold coins, which carried a very high premium. So you buy something like a 1/10 of an ounce coin,
Mm-hmm.
and you're paying double-digit premium. A lot of bar products now have come, but are more served to the market in more supply. So things like 5 and 10 gram bars, where you're not paying the same kind of premium, but you're buying a Swiss minted gold bar product, that can maintain its value, and you're not paying huge premium that you're going to lose when it comes time to sell. So
Yeah,
it's just simple things like that.
but it brings it into the range of purchasing for a lot more, people when they can get down to the fractional size of it. And your point about the premiums is a very important one to keep in mind, within that. But yeah, I just think, well, of course, I've been saying, I'm laughing at myself. I had somebody complain to me, somebody in the business, well, you're always talking about gold to me. And of course, my theme is devaluing, a declining purchasing power of the currency, which I can feel pretty comfortable about that theme. So
Yeah.
I don't think we're done in this. They're not done printing up money or creating money out of thin air. So that theme isn't run its course yet. That. So again, gold's a protector that way.
No, very much true, Mike. And as a long time, now a multi-decade listener of Money Talks, I
Mm-hmm.
remember listening to episodes when you called the Topping Gold
Mm-hmm.
back in, I can't remember if it was 2011. I think it was 2011. So you're not always talking gold. It's lately you've been talking gold, but you're not
Yeah.
always talking gold.
No, absolutely. And it's for that reason is that I
Yeah.
see, you look at, there's nothing coming out of the US presidential election that it suggests that spending is going to be down. It's a huge challenge in Canada where, I mean, we'd see what the Conservatives did, but I don't see them reducing spending. It's just the rate of growth will go down. Of course, we'll all light our hair on fire and the media will tell you it's a horrible cut, but it will be the rate of growth. And I just don't see that our productivity keeps up with the production and all of that stuff. So, yeah, I don't see any reason to think that that trend of declining purchasing power is over, and gold gives you protection against that.
No, I certainly agree with you. And it's the market dynamics that sort of continue to make gold look favorable, through the second part of this year, which, as an investor, as a long-term investor, I think continues to provide me with a little bit of comfort in the yellow metal.
Okay, let me just finish with this. It's just a little summation from you. Somebody comes in. What are the 2 or 3 considerations when they're looking to enter that side of the market, the physical market?
Uh, Consideration is liquidity. So in what form are you going to sell it? So say you have, for round numbers, a $10,000 investment. Do you buy one item or do you buy multiple items so you can divest it over a period of time?
Mm-hmm.
And then thinking about getting into the market the same way. A lot of investors come into the gold market and they want to spend all their money at once. Don't try and be cute and time the commodities markets. It's very hard to time the precious metals market. You average into the market the same way you might average into a stock position as well. And, coins versus bars, that comes down to preference. But, at the end of the day, I always say we're never going to sell you something that we're not going to buy back. But, buy the recognized product that everybody's buying. That's the easiest way to think about it. Don't
Well,
make
I
it too
love the idea of
complicated.
thinking in advance. You know what I mean? Like, think about your exit strategy, which I would say, a lot of stock people would say the same thing. Well, what point do you think you're wrong and you're going to sell that stock? You have your entry exit, parameter. So I think that's great advice when we come to gold. Well, look, I know you guys are busy. I hope you continue to be busy, but you're still writing your weekly kind of assessment of what you're seeing in the market, and people can go to bordergold.com bordergold.com. In the meantime, Rob, thanks for finding time with us.
Always a pleasure. Thank you for having me, Mike.